Stranded on a desert island with a major buy signal? Hello Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your midday market report for Tuesday, the 11th of September. On Wednesday, we have the German courts making a ruling on the Euro area's permanent bailout fund. Thursday, we have the Fed possibly coming in with another QE to the rescue. But is this all really that important? That's the question. The reality is the markets tell you what they want to do. And right now, they're telling us they want to go higher. One of the very best traders I have ever had the good fortune to run into lived on a mountain in Switzerland. He didn't listen to the news or market rumors. He simply went with the markets. In other words, he traded the markets on a technical basis. He could have been on a desert island. It didn't matter. He just didn't pay attention to the news or listen to the market rumors that fly around the trading floors every day. He relied purely on market action to make his decisions. And he made millions. So let's keep it simple, or as my Swiss friend used to tell me, they don't pay you any more for making it complicated. It may be different in the government, but in the trading, simpler is better. Now let's go to the charts and our trade triangles and see what's happening. We do have a major buy signal today in a major index. I'm going to share that with you. So let's go to our portfolio manager. And let me just refresh that. And you'll see which one it is. So if you will start with that one right now, because remember, we did not have a buy signal in this index, the Dow, until today. And there's the monthly trade triangle coming in at 13,330. It's 13,336 right now. But that is a major indication that we're going higher. Now we have all the indices. Go back here, all the indices. S&P 500, now the Dow, and finally the NASDAQ as well is also plus 100, indicating very strong trends. So if you were my friend in Switzerland on the mountain, you'd say, hey, the trend is up. I don't care about what Germany's going to do, what Bernanke's going to do. I'm going to go with the flow. Go with the line of least resistance. So let's go to the first chart. This could be the NASDAQ. Excuse me, the S&P 500, I beg your pardon. And you can see after this big move that we had last week on Thursday, we sort of consolidated here for the last 3 days. I view this as a positive sign. I think we could maybe consolidate for a little while longer, but eventually I think we'll see this market move out of this area and move higher. So let's just put that off. We don't need to see that again. I think we'll see the market move out of that area. Maybe like this, and boom, I think we'll start another leg up on the upside. So that's how I would see things going there. So let's see what see how things work out on that front. And I think we just have to be patient, but I think eventually that level will just continue just to go like this, and then suddenly, boom, we'll see the market going higher. So let's see how that plays out. So again, let me get this right here. That's something to definitely watch on the upside. So we're looking for this index, this particular index, as we say every time. We're still looking for the target zone for the S&P 500 is 1550. That's what we're looking for on the upside. So it's quite a bit higher from where we are now. We're currently trading at 1435, so it's over 100 points to the upside. So let's see how that plays out. Let's clear the screen and go to our next market. And that, of course, is going to be the Dow. Now, we just showed you the Dow has had a major move to the upside today with a major monthly trade triangle kicking in at 13,330. You can see that all of our trade triangles now are positive. And if you scope this out just a little bit further, you'll see that this market has really laid a very large energy field below it. So you can see if we can close up to these levels today, over 13,340 would be ideal. That would be a new high close for this market, and I think that would be extremely positive, indicating a much higher levels ahead of us. And you can look at this huge, what we consider to be a big energy field right here. That's incredibly powerful to push this market higher. So if we close up at these levels, 13,400, we are fantastically bullish. And you can say we are going to go from the 12.2 level, I was going to round this out, to the 13.2. So I would say we're looking at 14,000, 14,000, maybe 500, 14,200 on the upside on the Dow. So let's see how that plays out. It will go lockstep in with the S&P 500. So let's clear the screen. Go to our next market. The next market we're going to be looking at is the NASDAQ, and then we'll just look at that very quickly because it's pretty much lockstep and everything else. And the NASDAQ is really controlled by a large part with what Apple does. And Apple is coming out tomorrow with their iPhone 5. It's rumored to be the iPhone 5. And now let's talk about how it's going to help GDP, because everyone's going to be buying the iPhone 5 and all these services and data and so forth. Not so sure about that, but certainly it's going to be a very popular introduction to their iPhone lineup. So let's go to our next market. Next market is going to be crude oil. Crude oil is really kind of stopped here. It hasn't gone higher, it hasn't gone lower. It is higher for the week, however. And if we scope this out and put our, let's just put simple charts in here like we normally do, the candlestick charts, and let's just go to, let's say, 3 months, get a much closer view. You can see what's happening here in this market. We've talked about this ad nauseum, and that is basically you've got the 98 on the upsides, resistance. 94 on the downside is support, and that's pretty much where you are right now. And I think that's, we need to break out. I think the odds are this is beginning to look more and more like an energy field, and if we break out over the top here, then that'll turn our monthly trade triangle green, and that will be a plus 100. And of course that would be very, very bullish for this market. So let's see how that plays out. But again, we've got our intermediate term trend and daily trend. Now remember, when we trade this particular market in our World Cup portfolio, we just use these two indicators, the intermediate term, the weekly, and the short term daily for trading. So we are long basically from the 87.50 level based on our World Cup portfolio, and we've been in and out of the market. 96.74 is the last signal. Market's trading at 96.88, so a little bit of a profit, but nonetheless, it is very nimble, and that's the way to trade. So let's clear the screen, go to our next market. And this is the euro dollar. Euro dollar moved to its best levels. You can see we picked this up before at 27.47. It's 28.63. A lot of doubters in this market. It looks to me like this market's going to be strong for the next 8 to 10 weeks. And I think probably with the news out of Germany tomorrow from the court indicating the legality of being in the euro area's upside bailout fund, I think that'll be a positive for the euro. And I think that's really one of the things you're seeing in the market itself. Now, if you just blank out this last day here, for example, this is beginning to look like the gold market, where you just have those couple of quiet days and boom, it starts up again. That's what I think is going to happen to gold. So let's go to our next market, and that is in fact spot gold. And you can see a similar pattern. There's the up move, a few days here, and then suddenly I think we're going to see this market boom on the upside. So I would not want to be short gold. It is a very bullish trend. We've talked about this. If we scope this out even further, you'll see what I mean. And let's go to a couple of years, and let's take, we don't need to have this on here, the Fibonacci. Let's just take that down here. Let's make the charts very simple. Again, sometimes simplicity. Remember, we talked about simplicity at the top of the show. And let's just make this into a line chart. And let's draw a trend line, which we can do very easily right here. And you can see it touches those 3 points, and boom, it started. And if you look at the Fibonacci numbers again, it gets back to this Fibonacci being an amazing tool for investors and traders to use. So we go from here to here, the recent low, right on the 61.8% Fibonacci retracement. So we should have another big leg up, taking out these highs. We're predicting that gold's going to go over $2,000 an ounce. It's about a 15% move from where we are right now. So it should be a way to protect your value as the dollar continues to erode to the downside. So really pay close attention to that market today. And all of this week, we're looking for this market to be strong for the next several months. So it's not just going to be a one-day move. It's going to be a much more prolonged, progressive move. So plus 90, strong uptrend, stay long. Let's go to our next market. Copper. We picked up copper yesterday, a couple of days ago. In fact, let me just put that, let me just tell you, we picked up copper on the 7th, which is 4 days ago. And that was 3.56. Remember, the resistance was 355, and it's 369 right now. So it's looking very, very good on this trade, and we can see it going higher. Again, you could take the highs, the trend line from the highs right here, and just scope this through like this, and you can see how it just basically really makes the market change. So we're looking for this market to go higher. If it takes out this $4 level, then I think we're looking at something significantly higher, possibly making new highs, which would not surprise me, particularly if we get the stimulus coming in from the Fed tomorrow, or Thursday rather. You get the stuff coming from German courts tomorrow. Then there'll be a lot of stimulus, a lot of stuff going on, a lot of people getting excited. I'm not sure it's going to be a game changer, but like my friend in Switzerland said, go with the flow. They don't pay you more for making it complicated. So let's go to silver. Silver's in a bull market. Again, you can see the trend line. We talked about this trend line being broken and how important it was when it was broken to the upside. And there's a classic 3-point trend line, like picture perfect. And it's moved up, broken that downward trend, and you've got this really good support right here that around 28 it's held, and now we're sort of really moving this market out to the upside. So let's see what happens there. But generally speaking, if gold's going to go to $2,000, copper is going to go to maybe, I don't know, $5 or more, this could certainly go to $50 an ounce. So let's see what plays out in this market. Lastly, with the Reuters Jeffries CRB index, we picked this up, if you may recall, a couple of days ago, and that was the right around on August 21st we picked this up. It's obviously several days ago, a couple of weeks ago, and it looks to me like it wants to go higher. So 308.25, we're currently trading at 314. There's resistance that we think around the 320 level. If we draw the trend line in, we really think that's trend line here, but to be honest with you, you have to go further out with this one, I think. Yep, there it is. So you really need to go from this high through here. So that's why we were talking about the 320 level really being a potential problem for this market. But nonetheless, it has made a turn on the short-term trend line. Longer term, we still have some issues to get through, but I think we'll get through them because I think inflation is going to be hitting the world, not just this country, but the world, and there's going to be a scramble for raw materials, whether it's copper, whether it's silver, whether it's gold, grains, whatever it is. I think the demand is going to be very, very high. So anyway, this is Adam Hewison reporting to you on the markets today, September 11th, an infamous day in American history. I hope you're all doing well. I hope the markets are treating you well, and thank you for using MarketClub. And be sure to check out, if you haven't done so already, the World Cup portfolio. This portfolio was up so far this quarter in Q3 60% just for the quarter. Definitely want to check it out. I'm Adam Hewison for MarketClub. I'll be back tomorrow, same time, same place. Have a great trading day.